Hi, everyone. Welcome to the India Conference at Harvard 2022. Our next session for today is on FinTech in India. For those of you who are joining for the first time, let me introduce the India Conference to you. The India Conference at Harvard is co-hosted by students at Harvard University. We have a strong legacy of bringing together eminent leaders to share their thoughts on the most crucial matters facing India today. Before starting today's discussion, I'll briefly go over some housekeeping items. First, we'll kickstart the discussion with opening remarks from our panelists and moderator. That conversation will go on for about 45 minutes, and following that, we'll take up audience Q&A. We value audience engagement, so please use the Q&A function on Zoom to post your questions, but we request you to be respectable with your questions. We also request you to use our tag ICH 2022 to tweet and share the favorite quotes and insights from the panel today. Now, without much further ado, let me introduce our panelists for the day. We have three panelists. Our first panelist is Alok Mittal. Alok is the co-founder and CEO of Indifi Technology, which is India's leading full-stack platform for enabling debt financing for small businesses. He's also an active angel investor and on the board of TIE. Our next panelist is Mr. Jitendra Gupta. Jitendra is the founder and CEO of Jupiter Money, which aims to create a mobile-first banking experience for Indian millennials. He was also the founder of LazyPay. He's the ex-MD of PayU India and the founder of CitrusPay, which was acquired by Naspers and was one of the most successful fintech exits. And last but not the least, we have Upasana Taku. Upasana is the co-founder of Mobiqwik, which aims to simplify payment acceptance for retailers in India. She's the first woman to lead a payment company in India and has over 17 years of experience in product, payments, and financial services. The panel will be moderated by Ashish Agrawal. Ashish is the managing director at Sequoia, and he leads investments in the fintech space in India. He led investments into companies like Grow, PagerBook, and Plum, and also supported investments in Zomato, Ola, Oyo, and Gojek. So we have some very interesting topics for today's discussion. And with that, I would like to request Ashish to begin the panel discussion. So over to you.
Awesome. Thank you so much, Chandni. We have an illustrious set of panelists with us here today. Maybe I'm going to start with a few opening remarks on fintech, and I have a few questions that I've jotted down for the panelists. But for those of you in the audience, please feel free to keep sending us questions, and we'll keep picking those and throwing them onto our panelists. So look, all of us have gathered together here for the discussion on a sector which is perhaps amongst the most important sectors in emerging markets. The last I checked, financial services has about a third of market cap in India, and at 3 trillion of total market cap of publicly traded companies, financial services corresponds to give or take $1 trillion of market cap. This is not just the case in India, by the way. Look across in most emerging economies, be it in Southeast Asia, be it in Latin America or in Africa, you'll find financial services to be a disproportionately large share of the economy. Over the last few years, what we have seen happen not only in India, but around the world, and as Sequoia, we have been investors in many of these companies, is a wave of startups which are attempting to build interesting businesses in financial services. And we have a few panelists with us at the forefront of that trend. There is also a dynamic where, as in comparison to many other segments of the economy, where global companies have a chance to dominate and have dominated in many countries, financial services is one, partly because of regulation, partly because of nuances in consumer behavior. This is a sector in which local companies tend to dominate. So the leading bank of India is an Indian bank, the leading bank of Indonesia is an Indonesian bank, which is not the case with the leading retail company in India or the leading e-commerce company in India or the leading search company in India, for instance. So financial services provides this opportunity for local entrepreneurs to build very large businesses. And many of the panelists here are on track to building such large businesses. There is a reasonable activity that has happened of late, with many startups having gone to the $1 billion mark. perhaps are on track to get to the $10 billion mark. There are a couple of companies which have gone public in Paytm and Policy Bazaar, and many more which are on track. So it's an exciting time for fintech and financial services in India in particular. With that, maybe we start with that broad theme itself and get our panelists' views on that. If I may start with Jiten. Jiten, perhaps, the fintech sector is certainly very exciting in India, but perhaps the thing that has made it the most exciting is UPI. Maybe we start with that and talk about, you have seen the UPI wave pan out both in your experience at Citrus and then now with the Jupiter. Talk a little bit about what exactly is happening with UPI and what has changed and how advanced are these payment rails?
Sure, Ashish. Thanks for giving the chance to speak first. So if you look at it, anywhere in the world, wherever any new payment method or the new way of paying is being introduced, generally there is a fair amount of adoption time or the adoption curve which is being taken. And but I think that India has surprised everyone in not only just like the payments industry, but I think across the world, that how a new payment method could be adopted so fast and scaled so fast, because now it is like bigger than your Visa and MasterCard payments when it comes to number of transactions. I think quite a few things happened when the UPI was launched in 2016. So if you all remember, UPI was launched literally at the time of demonetization. So people did not have choices but to make digital payments in like November of 2016, and then UPI became one of the key method along with wallets at that point of time to be adopted by the consumers. And I think the other thing which is sort of really working in favor of UPI is that today, if you look at for digital payment wave to be sort of catching up in a market where most of the acceptance points were limited and most of the people were resistant to accept digital payments because of the cash economy which India had typically. I think it sort of was made free, and nowhere in the world you would see that the payment acceptance is being made free, and that brought like till 2000 whatever 18 or 19 we had like a million odd POS terminals, and now with UPI being accepted, being a universal acceptance method in India, this is like there are more than 30 million points being accepted. So suddenly, like so many things changing, right? And I think it is not just UPI. Like at the same time in India, the internet penetration changed in last 3 years or last 4 years specifically. So there are so many variables which came together along with UPI as a key payment method, the constraint for consumers to adopt it, the acceptance points being increasing. It's virtually free. It's quite easy. You don't need to move your money outside of the bank account where you hold your money. So I think it just like changed in the way consumers adopted, and the behavior wise it became like natural way for consumers to transact. So that's the like key elements I see.
No, for sure. Upasana, anything to add from your experience at Mobiqwik on UPI in particular?
Yeah, I think that, Jiten was on point. I think nobody can really deny that UPI is really a game changer. But I think like he was trying to say, or rather, I'll tell you from my journey when we were starting Mobiqwik as a digital wallet in India about 10, 12 years back, it was completely a cash driven economy. I remember many people trying to dissuade us that why are you starting a wallet? Who is going to pay via phones and digitally? I think the total number of online transactors at the time was some 10, 15 million users. And look, today that number stands at 300 million. And we definitely expect in the next 4 to 5 years that the number is going to double. to at least 600 million people paying digitally. And so I think it's not just UPI, but all the macro trends coming together. So data becoming cheap, smartphones becoming cheap, KYC becoming Aadhaar enabled and completely digital. And I think all of those coming together and then demon happening have led to the fact that we are. I mean, as you can see, like even in the form of internet, we went directly to 3G because there was no widely used CDMA in India versus other markets where there was that was fully set up. It took them much longer to get there. I think same thing is going to happen overall in the fintech India, like because only 10-20 million Indians were transacting and card terminals, etc., were low in number. And then here came smartphones, making everything easy. So therefore, the adoption is high. Similarly, I think on all financial services, we are going to see the same story play out because people don't have access to anything. Even today, a very small percentage of Indians, 3-4% Indians have access to credit, and even smaller number to insurance. So definitely, I think those factors also play. And the government has definitely added to the mix, right? Making it easier to do KYC, adding in UPI, making it open, etc., etc. So yeah, I think we have a very nice horizon, and I think lots more to happen from entrepreneurs coming into the fintech India market. A lot of opportunity still available.
Yeah, no, all of us will certainly agree to that. Alok, Upasana kind of mentioned this in passing around KYC and how Aadhaar has made it cheaper, faster to do KYC. For a lending business in particular, this must be critical, right? Like from your standpoint, like how has Aadhaar based KYC and that innovation helped jumpstart the lending business?
No, it has been one of the critical factors. I think lending is at somewhat of a inflection point in India, right? Only about 15% of the small businesses today have access to formal credit. So there has always been a massive market which is underserved or unserved. But the mechanisms to serve it, have not hit the hockey stick. And there are three things in my mind that are happening simultaneously, right? One, as you mentioned, Aadhaar-based KYC, but in more general terms, the investments in public infrastructure that have happened in the Indian market, right? And these go beyond just the KYC impact of Aadhaar. For example, electronic signatures, right? Today, more than 90% of the loans that we do to small businesses are electronically signed. I'm sure, consumer loans are close to 100%. The bank mandates are all electronic in nature, right? KYC is electronic. We have upcoming mechanisms like account aggregator, which is the open banking equivalent for the Indian market. And all of this is being built at utility grade as public infrastructure. So that brings a tremendous amount of efficiency in how companies like ours can tap into that infrastructure rather than having to build the rails ourselves, right? So that's one. Second, India is undergoing a massive wave of digitization, which is bringing a lot of data for these businesses upstream, right? And UPI is one of those examples. So even for massively offline businesses today, you will see 25 to 30% of their payment footprint being digital and growing rapidly. GST has been another key development in that. And what that is doing is that is bringing the data for these SMEs in electronic format, where you don't need to now visit a store to understand what their creditworthiness might be, right? And third is broadly what I would call as aggregation effect. So if you look at literally massive amount of money going into B2B tech-driven businesses, what they're doing is they're bringing all these small businesses online. And hence, the distribution is available now through these platforms. And distribution to small businesses has been a big problem globally, right? It's the most inefficient distribution segment, right? So solving for distribution, solving for data, and then solving for utility-grade infrastructure. All those three things are happening simultaneously. That is what is kind of driving the massive growth in this segment.
Yeah. In most sectors of the economy, entrepreneurs and businesses crib about how regulations stifle them and regulators are impediments to their growth and so on. Looks like in this sector, regulators have been actually very progressive and have with all the public infrastructure that has gotten built out, have effectively put a shot in the arm of the Indian fintech story, right? Like, how has your folks' experience been in dealing with the regulators, be it the RBI or the or any of the other bodies?
So
if I
in
were
our case, sorry, Jitendra, go ahead, please.
Go ahead, Alok, go ahead.
So I think RBI, which is the principal regulator for lending in India, has been very progressive. And I think the good thing is that they have not just taken the role of a regulator; they have also taken the role of someone who has to promote the industry, because inclusion is such a key imperative for the Indian market. I think partly, one has to get used to the pace and rhythm at which the regulator works. So in many cases, RBI will come down heavily on a certain sector, open it up slightly, gain experience, and then keep opening the doors more and more. So as long as you feel comfortable with that rhythm at which the regulator works, in all, it's been a very progressive and a regulator that has focused on market development.
Yeah. Jiten, you were about to add something.
Yeah, so Ashish was saying that if I were to take sort of give my view on this, I must say that the Indian regulator has been kind of a mixed bag. So sometimes like cautious, but at the same time, I have not seen them stifling innovation at any point of time. Because even if you look at like our sector, honestly, there are no guidelines for neobank in India. And it's kind of the deposit institution equivalent of that without the license, which is in my view a very scary thing. So from that standpoint, I think we have been engaging with them, and they have been taking this view that as far as customers' interests are being taken care by the licensed institutions, they don't want to stop this innovation, because maybe the customers are liking the offering and that's why they're adopting it. So they want to see it first in terms of the customer feedback and how it scales, and basis that they want to regulate it. I think that's a very, very progressive approach, if you ask me.
Yeah, no, for sure. Sorry, Upasana.
I'll just add to that if I could. I think while I concur with the panelists that net the regulator has been quite innovation friendly and industry friendly and progressive. Unlike other markets where large businesses have developed to a very large scale and only then regulation has come in, that doesn't happen in India. The regulator is very fast and almost works in a startup mode in pushing out new notifications and guidelines. I think one point I would like to make, especially given we are speaking about all of fintech. So as a fintech player, Mobiqwik has payment licenses from the Reserve Bank of India. Like Alok said, for lending, if we want a license, again, we'll be knocking the RBI's door. But for insurance distribution, we have a license from IRDAI. And then for, providing consumers guidance on investing in other equity and mutual fund products, we have a advisory license from SEBI. So if you think about it, if we really wanted to full-fledged provide a full suite of financial products to the user, one has to go to multiple regulators. So that, I think, is a fallacy which can get checked at some point. I don't know how soon. They come up with some sort of a license, just like we've come up with payment bank and small finance bank licenses. Maybe India also comes up with a universal digital bank or an open bank kind of license, which we have not seen yet. I know there's a draft paper circulating, but I think that would be another big sort of momentum creating sort of catalyst from the regulators, anvil, so to speak.
Yeah, no, it's a good idea, Upasana. Single window of clearance of sorts for fintech companies for different types of licenses, even if that's in a sandbox environment, could further boost innovation in the sector, for sure. I guess there'll be some questions coming from the audience as well, but we thought of structuring the next 30 minutes perhaps in maybe 2 or 3 buckets around payments, lending, banking, and crypto, which we thought may be helpful for or topics of interest for the audience. But please keep sending your questions, and we are happy to go off script and cover any things which are more important and more pertinent for you folks. Maybe we start with payments. Jitendra, Upasana, again, I'll start with both of you. Both of you have spent, I'd say, over a decade, maybe more, in payments and driving the adoption of payments in India. How has the ecosystem evolved if you were to take a, the 15-year kind of vantage point? Upasana, maybe you want to go first?
Yeah, sure. Yeah, I think the ecosystem has come a long way. I mean, I can tell you what sparked the idea of Mobiqwik for my co-founder was the fact that, quite a few of us are educated and carry digital cards, or rather debit and credit cards, and yet we had to go to physical stores to pay our bills for electricity, mobile phone, etc. And that's sort of how the idea got started. And the idea was, can we make daily life payments super simple? I think the adoption from e-commerce, physical retailers, and now post demon we have seen from even small merchants has been fantastic, and quite a few companies have been able to build into unicorns right on top of this opportunity. On the consumer side also, we have seen again and again sort of these watershed moments which have pushed the sort of number of people transacting digitally, whether it is COVID or demonetization or such other events. I think that both from the ecosystem perspective in terms of consumer interest, the retailer economy, the tools utilized for building the ecosystem, and the regulator itself coming up with sort of new ideas and opportunities. I think we've come a long way, and I think now I can say we have a critical mass now. I mean, with 250, 300 million Indians paying digitally, I definitely feel proud that, we have played a part of building this, payment ecosystem. But I think we have a long way to go. After all, we are a billion people, and most of India is still paying using cash. So there's a long way to go. But yeah, we have definitely, come off age, and we can claim that this is going to be the next large payments fintech market in the world in terms of consumption over the next 10 years.
Yeah, so Ashish, I have somewhat similar views, and I would say that I must admit I'm like totally taken aback by the last 10 years progress in whole payments ecosystem. I still remember 2011 when we started first Citrus Pay. My the best bull case estimate which we had given to Sequoia, who had been our first and sort of subsequent investors as well. We had beaten that bull case also by like 2.5x. So that was way back in 2016. And in 2016, when we sold the company, we had given certain projections, and coincidentally, I was looking at projections literally like last week, and again we beaten those projections. Like when I left PayU in 2019, we had beaten those projections by 3x in 3 years. So I'm like, this market continues to surprise, and now I'm kind of convinced that this market depth is like very, very big, and next 10 years is going to be like a dream run. People who are in the ecosystem is going to be a dream run for them. So it's best time to be in the market, best time to start in this market, and like you don't have to do anything different. Even if you are part of the market, you will like continue to win, and you will continue to shine. That's what my belief is now.
Yeah. On a lighter note about projections, then this is my 10th year at Sequoia, and I have realized that we are always wrong in projections. Like we are either wrong on the negative side or on the positive side, but never once have we been actually right about projections. Maybe this is relevant for all of you who make these 5-year projections on and cash flow statements and discounted cash flow analysis. Well, but coming back to payments, Jiten, one of the gripes of the industry has been that there's no money in payments. Like MDRs are close to zero on most forms of payments, or at least on UPI, and there's a small bit on debit and a little bit more on credit. Do you think payments will continue to be just a hook to acquire users and then upsell other products and services to them, be it consumer credit or be it credit or insurance or wealth management, or do you think there is a standalone business in payments?
So it's an interesting question what you're asking, and And I think there are two type of companies, honestly, at least in India market. The companies who are doing payments as a business, and they are making money, and we have like plenty of such examples. So we have examples in form of like PayU or Razor Pay, and all of these companies in online side. Then in the offline side, you have like Pine Labs or like the M-Swipe kind of companies who sort of make standalone money in payments business. So that's a one tribe. And the second tribe is who start payments business by saying that I don't want to make money out of this business. I want to make this business as a more of a engagement and acquisition hook, either for consumers or for merchants, and then sell them services which are lending or insurance or XYZ. Or the nowadays, like we see the GPay and PhonePe, where the ad business is doing more revenue than any other services for that matter. So I think people sort of continue to innovate when it comes to revenue making opportunities by different ways. But the difference of whether it's a standalone money making or making money through the allied business, I think it's a founder DNA rather than we sort of wanting to generalize that what is the right way of making money out of this business. So I think it's a question of what's the founder's belief and DNA in making money of that. So standalone, like I still feel there's enough money if one wants to make and sort of continue to do a good job either for merchants or for consumers. Of course, you cannot charge consumers directly when it comes to like UPI and all of those kind of things. But there are ways to tell them that this is the service we're providing them, and either you can have, and we have to yet to see those models, but either you can have a subscription model or convenience model, and all of those kind of stuff you would start seeing very, very soon, people who believe in standalone business model.
Fair enough. Upasana, maybe coming back to you, there's been this entire debate around mobile wallets. They were very popular once and were heralded as the way to get India to adopt digital payments. With UPI, lots of questions have been asked. Hey, what is the relevance of mobile wallets? How do you think this ecosystem mobile wallets coexist with the UPI?
So Ashish, maybe you didn't get the memo. I think wallets were the fad in 2015 or thereabouts, and everybody wanted a wallet license. And then they went out of fashion when UPI started coming in and was seeing huge growth. And now I'm told that 2021, just like clothes come back in fashion, I'm told wallet is now in fashion and people are trying to buy licenses. And I'll tell you why, because 2021 in India has been the year of buy now, pay later, because a firm went public last year and Square acquired Afterpay. So anyone and everyone who was trying to do any sort of consumer credit play quickly realized that how are we going to do credit, especially consumer small ticket credit if you want to do. Digitally, there are only two methods. Either you issue a prepaid card and you put your credit on top of that, or you have a wallet and you put the credit in the wallet. And so therefore, I'm told that wallets are now coming back into fashion. But to actually answer your question, I think that there is a simple coexistence. While there is UPI will grow fantastically. It will enable, financial inclusion en masse in India, teaching people how to make their first digital payment. However, just like debit cards and credit cards coexist, I think that's how wallet will coexist, because UPI, after all, all the apps that are built on top of it, they are in a way wrappers. The KYC is with the bank. The money is sitting with the bank. All the meaty data is with the bank. So I'm not sure how these apps will eventually make money. However, a wallet ecosystem allows a wallet platform to make money from the MDR, from the payment itself by charging the merchant, from the credit parked in the wallet, from enabling the KYC of the wallet to be able to cross-sell other products, all financial products to the user. So from a long-term Rails perspective, at least at Mobiqwik, we feel very comfortable and confident in our wallet-driven buy now pay later strategy. Although we enable UPI as a key feature for our users. And I actually also wanted to chime in on your previous question about profitability and making money out of payments. So while Jitendra mentioned, how B2B or rather, acquiring businesses are getting built in India that make tremendous amount of money. I do believe that it is possible to make money on a consumer payments play as well. I'm happy to inform our audience that Mobiqwik is doing 100 million in revenue this year. And as of the December quarter, we've already turned profitable at the EBITDA level. And I plan to do the same in the March quarter as well. So it is possible to make money just out of a payments business. You just have to know how to build a capital efficient business. And of course, it's possible to layer and make more margins by selling other financial products to the same user once you have the user hooked in with payments.
Awesome. No, I mean, look, both Mobiqwik and Citrus's and Razorpay and PayU's journeys have been testament that there is perhaps money to be made in payments if you are smart about it. Maybe one last question. I think there is a question from the audience on payments, which is, do you think COVID was a key element for the acceptance of UPI payment or online payment, or for the acceleration? If I guess that's what the person had in mind. Any points of view, Alok, either from you or from Jitendra or Upasana?
Sure, Ashish, I would say that more than COVID, I think it was more of a demonetization which changed India's payment landscape. COVID kind of helped more on the online payment side of the merchants, because those merchants started seeing growth, of course, because people had no option but to order online. So a few categories in that segment, like the commerce or the groceries and all of that. So those categories gained a lot, and that sort of helped the online payments growth. But the key catalyst, if you were to ask me, I think that was still demonetization, because people changed habits forcefully, which is like very, very difficult to like, even if you give incentives for ages, people don't change habits so easily. But because of the lack of choices, they had to change the habits.
Yeah, demon was certainly a very strong boost to the entire digital economy, including payments. Maybe we'll keep going, and audience, please keep asking questions. Moving on to lending, Alok, if I can call upon you, you have perhaps seen the lending journey over the last few years at Indifi, and I'm sure in your experience at Canaan as well, working with many startups. Where do you think India is on the curve of digital lending today?
So on the consumer lending side, there has been a lot more progress than on the small business lending side, and this is something that we had expected, anticipated, almost 6 to 7 years back. Partially because the process rails are far more in shape. So, for example, you can actually do end-to-end digital journeys with digital KYC and so on. But partly also because the complexity of underwriting in consumer businesses tends to be low, right? And globally, we've seen that consumer lending tends to be less defensible as a result of that. So even if you look at the US market, folks like Lending Club were the early movers. But once you had Marcus and everyone coming in, the window of differentiation started to contract. The other part which is significant, and we spoke about the public digital infrastructure a little bit. One way to view the public digital infrastructure, right, is as an enabler, and massively has been so. But second is also it tends to commoditize businesses. So one theme that you will see in the public digital infrastructure is pretty much look at a company that is creating private infrastructure, and you will see that in a 2-year time frame that gets subsumed in the public infrastructure, right? So you remember the Paytm business, 2014-15 got subsumed by UPI. Look at the Perfios business getting subsumed by account aggregator. So you are almost racing against public digital infrastructure and the regulator in where the window of differentiation exists. On the small business side, that pace of adoption has been slower, So most of the so-called digital lenders in the small business space continue to operate with massive feet on street branch-based infrastructure. So we'll be one of the very few, and literally count on one hand, of SME lenders who don't have feet on street or a branch infrastructure, right? So in some sense, as I mentioned, the enablers for that are setting in place now. And hence that's a space that has lagged a little bit. The data complexity there is one of the core reasons, why that has lagged behind consumer lending as far as digitization is concerned. The interesting part about this is that unlike the US market, which started almost as fintechs being adversaries to the conventional financial system, right? And I remember 2008, 9, 10, the narrative was fintechs are going to eat the banks, right? And they discovered partnership much later in the cycle. The Indian fintech environment started with partnerships as the core theme, right? And so today, when we are seeing momentum build up in consumer lending, build up in SME lending, a lot of that is also because of the partnerships that are happening. So, for example, the balance sheet for most of us, regardless of whether it's consumer lending or business lending, is coming from the incumbents, right? The licenses are coming from the incumbents. And that is also one of the reasons why regulation has been friendly, because, incumbents are not chasing another agenda. Incumbents are also chasing that partnership agenda. So pretty much the entire industry is aligned on, regulation, supporting digital lending. So I think that has been one of the key factors there.
Yeah. Given this dynamic, Alok, of consumer, adoption of digital lending being faster than SME, what prompted you to start in SME businesses, as in SME lending? Was the challenge that the problem was more challenging?
Actually, it was actually that absolute factor that's prompted me to start in SME, right? Because way back 2014, when I started to think about this, we were already beginning to see how quickly consumer lending businesses will tend to get commoditized, right? And the complexity of both the process and data in small businesses, in my mind, are far more defensible than in the consumer lending space. One thing that I had not anticipated at that time, but it's coming to the fore, is a lot of consumer lending is moving to the customer interface much faster. So you're not just competing with the banks, you're also competing with the points of customer engagement. That could be the payment platform at one level, it could be the e-commerce platform. So because these journeys are relatively simpler, the credit algorithms are relatively simpler, and the lending that is happening is very, very short tenure. So risk is more manageable in consumer lending. A lot of that is migrating towards the front end. So those are exactly the factors why we chose to be in SME lending, because we think it's a more defensible. You can create IP over time. The data complexity is hard enough. Segment complexity is enough. So SMEs is not one segment, right? And you have to solve for different segments differently.
Yeah. Well, Upasana, Jiten, if I could ask you to chime in, both of you have built credit businesses. There's a BNPL business now in Mobiqwik, and Jiten, you built LazyPay as part of PayU in the past. What are your views on consumer lending, especially? Do you concur with Alok's point of view, or do you have different thoughts on this?
So, Jiten, I'll go first if you don't mind. I think that consumer lending definitely is easier because most Indians have their Aadhaar, PAN, and various other information points now digital. So the user experience can be built very simply, and which is what most fintechs like us have done. I think the segment of user that people are going after and the products that people are able to build is completely depend on their assets in terms of their businesses. For example, net new fintech or lending startups that are acquiring users from Google and have a massive user acquisition cost, they are therefore focusing on a higher ticket product where they are able to absorb that cost and still make some money after losses. I think that if I look at the vast majority of NBFCs and incumbent financial institutions, and also a large majority of startups, if I could, I think because they are not sitting on a base of users and data, so they're focusing a lot more on the top 70 million or top 100 million Indians, where there is some data footprint available digitally and on the credit bureaus about these users. And I think that's where a lot of people are working on. There's a lot of competition. I would actually urge, because I expect hopefully some of these Harvard students will also come and build startups in India or work for startups in India. I think the opportunity is much larger when you think about the large pie, which is to think about, if 300 people, 300 million Indians are transacting digitally today, in the next 5 years, maybe this number will be 700 million. In the next 10 years, it will be almost 1 billion people. And that's where I think there is a huge opportunity based on people's spend. Can we underwrite them and give them proportionate amount of credit? I think those are going to be, some unique opportunities. And I think while buy now, pay later and consumer credit, has seen a lot of popularity, both on the consumer front and the ecosystem front in the last 1 or 2 years in India. I think there's a lot more work to be done. I mean, there's a lot of opportunity, but right now people are giving out credit as if they're giving out cashback. So we have to see how real, credit is going to be sustainable to users on a long-term basis.
Sure. So I actually concur most part with both Alok and Upasana in terms of the credit opportunity in India, and the way India is like highly underserved market when it comes to credit, not just in SME but in consumer side as well. That being said, I would say that prima facie there are like 3 or 4 levers of any credit business, and especially and when I sort of specifically answer on consumer lending business, I think the levers are like very, very standard, which is your cost of acquisition, your cost of capital, your cost of operations, and your credit cost, which is that how much of the credit losses you have. And for whatever reason, if you can influence these levers favorably than others, there is a business opportunity. And I think that's the way I look at fundamentally in these businesses. So some businesses, they sort of try to influence CAC by doing the BNPL products because the low CAC, high sometimes, like most businesses, and I'm not commenting on Mobiqwik here, so Upasana, excuse me for that, but most businesses they feel that BNPL is like a low CAC when it comes to customer acquisition, so they are okay with high credit losses because they sort of bank on saying then the at least the solvent customers, they will be able to lend further. Or even if you look at cost of capital, like today, this is one area where most fintechs have not been successful in India, market like India. So people who are able to crack that, and we see few innovative business models. It has to be seen how they scale, but still through P2P lending, people are able to influence the cost of capital way. So, and similarly, like the collection costs, the cost of operations. So effectively, any business who is able to influence these 4 levers favorably, or 2 out of 4, or 3 out of 4, or 4 out of 4, whatever, I think they will be the winners in the market going forward. So that's the way I see structurally solving this problem.
Awesome. There's one question from the audience in regards to lending, which is around P2P lending. What is the future of P2P lending from specific to India? Would any of the panelists like to take that up?
So personally, yeah, sorry, hello. Yeah, so I would just say my line of thought, because personally, I have been slightly wary on this side of the lending business, more so because I think the way guidelines are being provided by a regulator in India, the platforms are not supposed to do underwriting decisions. The platform are supposed to provide only signals. And what tends to happen is, since platforms are very less or almost no skin in the game, as per the current regulations, the optimal efficiencies to achieve is the key risk. And I think that's the biggest systematic risk which these platforms create. And so personally, I'm little adversely biased when it comes to these businesses. That being said, we are seeing few companies able to influence these models effectively by by leveraging the deposit base and the lending base through these platforms. Now, whether that arbitrage can sustain for long, I think that has to be seen. But systematically, I'm adversely biased.
So I concur with Jitendra on that, maybe for a slightly different reason. So I think there are two examples of P2P businesses globally, right? So US market, in my prior role, we were one of the early investors in Lending Club. Within 4 years of starting the company, way back in 2012, retail supply was less than 25% of their business. They ultimately shut down the retail supply because institutional supply of capital just scales much more massively than retail supply does, right? So there is a genuine issue of scale on supply from retail sources of capital. The second example we've seen is China, where it scaled massively because banks weren't paying anything, but it was very poorly governed, and hence there were big frauds that happened in that space. And I think both those issues are going to plague the Indian P2P market as well. To Jitendra's point, there is a set of guidelines around P2P, so the regulator again has been fairly proactive in regulating the space. But most stories that I've heard of the people who are making it work are people who are circumventing those guidelines and will end up creating systemic risk in the business. There is a related question about crypto. We'll come to it when we come to it, but I think that is where the P2P disruption might lie.
Awesome. I'm going to touch upon one last topic before we move on to crypto, which is probably the most exciting thing happening in fintech today. Well, before we go there, Jiten, neobanking, that has been the buzzword in the circles, and every company. There are some companies which are attempting to build neobanks, such as yours from the get-go, and every other company is attempting to morph into a neobank. But so several attempts happening in neobanking. What is the dream here? How large is the prize?
So it's a very interesting question. What are you asking? So I'll give my sole view, Ashish. So I think like I've done like payments and lending in some form, and having done that, my big realization was personally that I think the fintechs in India still haven't made any dent to the banking industry. And we all crave about banking industry. We all talk about unbundling of banking products and all of that. And this is where I was just thinking that why did that happen, or why is that happening? So one of the insight which I got personally was that the banks have a very, very innate relationship with the consumers or their customers, which is more of a trust relationship, and which none of the fintechs anywhere in the world for that matter are not able to establish, because consumers see fintech products more of a transactional relationship product. So for each transaction they try to optimize their behavior, that okay, am I getting more cashback through this payment app? Let me use this payment app today. Am I getting a better lending rate today through this fintech app? Let me optimize that. But you don't change your bank every day. So it's a very tough segment to enter into for that matter. But once you're able to do a reasonable sort of work with the customer base, I think it's very difficult to get disrupted. It's like overnight you can't disrupt, and which is what the neobanks also, if you look at it, overnight they can't disrupt banking industry. It will take, like in my view, next decade to sort of have a sizable scale, because consumers trust doesn't get built overnight. It's by your each action, by the services you provide, by the transparency you have in dealing with them. So I think from that standpoint, opportunity is big if somebody is able to make it work. I think the price is like bigger than what you can expect. Honestly, we have seen that in Nubank, we are seeing in Revolut, we are seeing that in Chime and Monzos and all of that, right? So so clearly it's a market thesis that customers' behavior is changing, especially of the young customers, where they want to move towards a better banking experience. They don't have biases about the large 4 or large 5 banks towards them. They have zero biases. They're open to try out or see what is the best banking product for them. So if you are able to get along in their journey, the next 10 years you will be the winner. I think that is the thesis with which we are proceeding.
Awesome. And I suppose many other companies are as well, given how competitive the neo-banking space has become. But thank you for sharing that perspective. Then maybe link to that one question from the audience. And I guess this references the Paytm journey as well. If I may distill the question down, the fintech industry has become very competitive, and that is diluting down economics and profits for all players. Any points of view from the panelists on that?
Maybe I'll say something. So I think the fintech industry in India, guys, has always been competitive. I mean, Google had famously done a very nice press release 2 years ago saying the next billion users, are in India. And I think that it isn't new. It's not that in the last 2 years, Walmart, Google, Facebook, and others have taken interest in the payment space. Those interests have been there in the last 5 years. No new UPI app has come in the last 3 years. So I think that one cannot say. So high growth is definitely a strategy to be adopted in the Indian market. But I think we cannot base how companies will perform based on the performance of one company, because different companies adopt different strategies, and sometimes they go too far and wide and results in not a clear strategy, and therefore not a clear P&L either. I think it is possible, and we are seeing several companies on the merchant side as well as on the consumer side adopting a differentiated play and then demonstrating solid business fundamentals. So I don't think that competition has anything to do necessarily with the losses of certain companies versus others.
Fair enough. I also think the market is so large that in financial services in particular, there could be 5-10 companies in each of these segments, and still, each could run a very profitable, build a profitable large business. Maybe moving on to one last topic, which is crypto, and perhaps the Ferrari or the most exciting part of fintech today. Maybe Alok, if I could call upon you, what are you seeing happening in the crypto world, and maybe take the lending lens to it, all the stuff that is happening in DeFi, etc. in particular?
Yeah. So I must admit that I'm still, diving into the weeds on this. But there are at least a couple of areas that, within the lending space are of keen interest. One is what we were referring to earlier, right? Of what does it take to scale up peer-to-peer lending, right? And we are beginning to see, companies that are now planning on leveraging global capital, right, as the wholesale pool of capital, if you will, right? So, similar to the crowdfunding companies that came up earlier, right, whether it is in the commercial domain like a Kickstarter, or it's in the social domain like a Milap or a Keto, I think capital will become liquid across geos. Even in a scenario like India, where the regulators' outlook on crypto might not be very positive, there will be translation outside jurisdiction that will happen, and in some sense, global retail pools of capital will start to become available for lending, right? And I think that's going to happen, relatively speaking, in the near term. The second opportunity, which is massively exciting because we've been thinking about that for a while, but the enablers haven't been in place, is the thinking that is now getting encapsulated in decentralized autonomous organizations, right? And really, the center of that thought is, for thousands of years, credit decisions were made very, very close to the consumer, right? You were the distributor, you were the local money lender, and so the information arbitrage was limited. Right. With the advent of massive banks, the information arbitrage has gone up. Relationship banking now doesn't exist, right? Large banks normally tend to deal with every customer, as an entry in the passbook. And I think there is an opportunity to build back, take that credit decision closer to the customer back again on basis of decentralized decisioning. So in my mind, just the thinking that is going on in that world, right? And I'm largely referring to uncollateralized lending here, is valuable whether you implement that on a blockchain or you later implement that, in a centralized format like ours. But I think that ability to take the credit decisioning down to, back to the customer touch point, I think is very, very powerful. So those are a couple of areas that I'm personally excited about in how the crypto thinking affects lending.
Yeah, no, I think the movement of capital across borders and that resulting in new sources of capital for P2P is a very exciting trend, and certainly the DAO trend is also one to watch out for. Maybe Upasana, Jiten, if I could point to you, one of the challenges I guess every fintech company is facing in India today is that the crypto as an ecosystem, it's the regulation is still hazy. There is some taxation, etc., that has been introduced by the government, but legality of cryptocurrency itself is still in question. There is a worldview out there which believes that fintech will be subsumed by crypto, i.e., fintech will be a part of Web3 or crypto, and that ecosystem will be larger. At the same time, you have this dynamic in that as a regulated entity, such as the ones you guys run, if you do anything today in crypto, you have the risk of attracting the ire of the regulator. How do you kind of trend that line, and how do you kind of continue to be innovative and take some steps in crypto while being in the clear on regulation, or is that not even possible?
So, Ashish, personally, I would say like we are in the watch mode, and I must admit that I think personally I have been like little unaware about much about crypto space personally. So I'm like still learning that what implications it could have on our business. We have people in our team who are sort of keeping a watch what's happening globally, and could there be a business impact on model like us. That being said, uh, being regulated, or especially like you think it like the neobank are not regulated as such, it's anyway a gray area. Being in a gray area, you don't want to dwell into another gray area or a black area, I would say. So we are like completely staying away when it comes to dealing with crypto. But we are watching from the distance that how regulator is thinking. Are they giving any signals that they could consider it in any form and manner? And basis that we'll take a call. But we are keeping our eye on global businesses, how people are building those businesses, so that if something opens up, at least we are not like investing or wasting, I would say, a year more to understand what to do now. So that's the approach we are taking.
Yeah, and we don't even know what crypto is. We only know blockchain and assets now, Ashish.
That's fair. Sure. I guess we are coming up
So I
on
think
time.
one more interesting announcement in the budget done by the finance minister, Ms. Sitaraman, was around introducing an official digital currency. And I know the bill has not come through yet, but I think that might bring clarity as to how things are going to pan out. I think right now, like my co-panelists have been saying, it's a little black, little white, somewhere in between. And I think everybody is trying to support the cause from the sidelines. At least that's what I can say about all the major players. But I mean, I don't know if you guys are tracking the growth in terms of number of retail users, zooming into buy crypto, especially in the last couple of months while the markets have been dipping. I think more and more Indians have started buying crypto as an asset. But I think still early days from an India perspective. We have to see what eventually comes out in terms of regulation.
Yep. I think we are at time. Any parting thoughts or comments from any of the panelists? I guess we have lots of HPS students in the audience. Any inputs or guidance to them as they think about a potential career in Indian fintech?
Absolutely. I think
So
the Indian fintech markets over the next 10 years are going to be one of the most exciting markets to play. It is a market where you need to be continuously on your feet, because while our businesses are young, we'll have to reinvent our businesses every 3 years, 4 years. So if people in the group are wanting to have a ride of the lifetime, I would invite them to come participate as entrepreneurs, as employees, as innovators. It's a very exciting market.
I can speak from my own experience, guys. I studied at Stanford, worked in the Valley, and decided that giving up the green card and coming back home was worth it. And 12 years into it, I can tell you, I haven't regretted till date. I definitely believe that US has its advantages, but I think what happens there in terms of innovation is incremental innovation, because the rails of everything, even in fintech, have been built. And what you'll get to do here in India will be build things from scratch. It's the raw pleasure of building something from scratch is something that fintech India offers everyone.
My parting comment, Ashish, would be like, if somebody is starting off anything in India, don't think too much. Just dive into Indian fintech. Next 10 years will be dream run. That's the only comment I would make.
Awesome. With that, thank you so much, everyone, for joining in today. Chandni, Meghna, thank you so much for having all of us, and good day to all of you.
Thank you so much for the great discussion. What a great way to end the first day of the Howard India conference. I would like to thank the panelists and our moderator for this really insightful conversation. We also have a few panels tomorrow for the conference. So members of the audience, we would love to see you again tomorrow. Thank you so much for joining us today.
Yeah, you can check out the upcoming panels on indiaconference-2022.com. And we hope to see you tomorrow. Thank you.
Thank you
Guys for joining us. This is such a great discussion.